Hello and welcome to today's video about business accounting. And this one is about setting up a business. So you've decided to start your business. How do you set it up legally? So if there's only you, this is called a sole trader situation. If you own all your business, you have a choice how to set it up. So a sole trader means there's no real separation of things owned by the business and things owned by you personally. For example, you may own a machine to make things for the business. You may also own a bed, which is for your personal use and has nothing to do with the business. If you're a sole trader, the law sees no difference between the machine and the bed. It just sees them as both things that are owned by you. So if there's only you, a different way to do it, not a sole trader, is through a company. So if you own your business through a company, the law sees the company like a separate person. So in the example, the machine would be owned by the company and the bed would be owned by you. In other words, the business property is kept in a separate basket from your personal property. So why is this difference important? Firstly, it affects profits and taxes. So let's say, for example, the business makes a loss of 10,000 baht for 2023, and you have a salary from your work for an NGO of 30,000 baht for the same year. For a sole trader, the people who collect tax would say that your income for the year was 20,000 baht. That is your 30,000 baht salary minus your 10,000 business loss. So you would pay tax on 20,000 baht. If the business was run by a separate company, the tax people would say, okay, firstly, the company made a loss, so no tax need to be paid for that. Secondly, you personally had an income of 30,000 baht, so you pay tax on 30,000 baht. So you pay more tax with a company than a sole trader. Now let's look at the effect on borrowing. So we'll look at the example where the business borrows 10,000 baht for 3 years. For a sole trader, the borrower is you, so you owe the money. If the business was run by a separate company, the borrower would be the company and not you. The company owes the money. What happens if I can't pay back the money? So let's say you own a house and you didn't borrow any money to buy it. If you are a sole trader and the business cannot pay back the loan, the lender can make you pay it back, even if you have to sell your house to pay it back. If the business is a company, the lender can only ask the company to pay back the money. It cannot force you to sell your house because you are not the borrower, the company is. Okay, what if it's not only you? What if you join with other people to start a business? The usual reason for doing this is because you don't have enough money or skills to start a business on your own. And this time you cannot be a sole trader because that is for only one. Instead, you can be a partnership. A partnership is a bit like a sole trader because the law doesn't treat the things that belong to the business, like machines, differently than the things that belong to the partners, like their car. Everything is in one basket, not separate baskets for things that belong to the business and things that belong to the people who own the business. You can also make a company if there's more than just you, like when there's only you. So why is this difference important? So firstly, tax. Like a sole trader, if the partnership business makes profits and you also have a salary from working, the tax people will add them together and tax you on the results. So for example, your share of the business profit is a loss of 20,000 baht, minus 20,000. Your salary from work is 30,000 baht, so the net position, 30,000 minus 20,000 is 10,000, and that is what you pay tax on. Notice it says your share of business profit. The profit or loss of the business is shared between the partners according to the percentage you put in at the start. So for example, there are two partners. When you started the business, you paid 1/3 of the money that was needed and your partner paid 2/3. Because he paid 2/3 of the money needed, his share of the profit is 2/3. So in year one, the business made a loss of 60,000 baht. Your share was 20,000. Also making decisions in a partnership. Just like the profits or losses were shared according to how much money you put in at the start, the number of votes you get when it's time to make a decision for the business depends on how much money you put in at the start. If your partner put in 2/3 of the money and you put in 1/3, he will get 2/3 of the votes. This means he will always get his way when there's a decision to be made. If you disagree, it doesn't matter, he's got more votes than you. What if the business borrows money and can't pay it back? If the business is set up as a company, the company will be the borrower and the lender cannot ask the owners of the shares to pay it back. If it is set up as a partnership, they can. But there's one important difference from a sole trader. The lender can go to any one of the partners and ask them for all the money back. This is really important. The lender doesn't have to go to you for 1/3 and your partner for 2/3 of the amount of the loan. So for example, your partner is rich. That's why he could put in more money than you. You are poor. The lenders will probably ask both of you to pay back all the money that is owed. But they will expect to get it from your partner, not you. This doesn't mean that if your partner pays the lender, your problem is over. Your partner can still make you pay your share, but it might be difficult for him to get the money from you because you're poor. Because of this, it's more risky to be in a partnership if you are the rich guy than if you're the poor guy. If you're the rich guy, the lenders will always try to get the money from you. You might feel this is a bit unfair, but remember, in the example we have been using, the rich guy can make all the decisions without the agreement of the poor guy, because he put in 2/3 of the money at the start. So if the company's in a mess, it's probably because the rich guy made some bad decisions. Where it gets unfair is if the rich guy only owns 25% of the business and the poor guy owns 75%. But this doesn't happen very often. What if it's a company? If the business is set up as a company, the tax situation is completely different. The profit or loss from the company is kept completely separate in a separate basket from your personal salary from working. They would say the company made a loss, so he doesn't have to pay any tax. You received a salary of 30,000 baht, so you should pay tax on that. So for example, often you have a young person who has a good idea for a business, but not enough money to start the business alone. And what she needs is someone who is rich to join her. Rich people are usually older. They may already have a job or a business of their own. They may not even understand the young person's business idea, especially if it includes new technology. But they like the idea and they want to support it. So they set up a business together with the rich person giving 80% of the money and the young person only 20%. What benefit will they get? For the rich person, it's an opportunity to use their money in a way that might make them a lot more money than keeping their money in the bank if the idea is good. They will get 80% of the profit. For the young, poor person, it's an opportunity to put her business idea into action. Without the rich person, it would just be a good idea, but she could not test if it works. Also, someone else might have the same idea and set up a business doing the same thing before she does. So by joining with the old person, she can start her business. Sometimes there are bigger partnerships. Partnerships are often used by people like doctors and lawyers or accountants, where you have a lot of people in the same business working together. They're also used a lot where two people or businesses come together to work on a project. For example, ABC Limited is an engineering company and XYZ Limited is a construction company. They have worked together to get Mesot City to use them to build a new bridge next to the Friendship Bridge, because the Friendship Bridge is too small for all the trucks. The new bridge will take 1 year to build, so they will be working together for about 1 year. So they form a partnership until the contract is finished, and then they end it. They will share the profits based on the percentage of the money they gave at the start. No one. A partnership can be between two people, one person in a company, or two companies. Note 2, you can have as many people or companies in a partnership as you want. And note 3, in all these examples of partnerships, they also have the option of creating a company instead. Decision making in a company. How many votes you have at decision making time depends on how many shares you own. If there are 1,000 shares and you own only one, you get 1 out of 1,000 votes. It doesn't matter how long you've owned the share. Maybe you bought the share from the previous owner only yesterday. Doesn't matter, you get a vote. International corporations like Toyota, Ford, Coca-Cola, petrol companies, etc. have many thousands of shareholders who live in many different countries. Just because Ford is a USA company and Toyota is a Japanese company doesn't mean that all the people who have shares in those companies are from USA or Japan. For example, if you live in Australia or Europe or Thailand, you can buy shares in these companies. Let's have a quick look at company meetings. Every year, the company will have a meeting that all the shareholders are invited to, even if you only hold a small number of shares. This is called the Annual General Meeting, or AGM, and all companies must have one every year by law. So, for example, Toyota may have its AGM in Japan. Clearly, not everyone who owns shares in Toyota will want to or be able to go, especially if they live in Europe or Australia and they have to pay a lot of money to get there. This doesn't mean you cannot vote. The company sends you a list of all the questions that there will be a vote about at the meeting, and you have the opportunity to tell them which way you want to vote for each of the questions. You don't have to go to the meeting to do this. The company will also vote for directors. These are representatives of the shareholders who will help to look after the company for the next year until the next meeting. Clearly, it is not possible for all the shareholders to vote on every decision the company has to make during the year. So the directors act as representatives of the shareholders. So the decision-making structure is like this. At the top level, you have the company, XYZ Limited. Below that, you have the directors. These are the people who are voted for by the shareholders. Below that, you have the Chief Executive Officer, or CEO. This is the boss of the business. So he is an employee, he's paid and he works for them, he's not voted for, and he runs the business day to day. And below him are the workers who have to follow what he says. The directors usually meet about once every month, and the CEO or boss makes the decisions that are needed each day, and he only discusses the very important ones with the directors. The CEO also goes to the directors' meetings. What if you want to take your money out? Usually with a partnership or a company, you cannot ask the business to give you your money back. If you want to take your money out, you have to find someone who will buy your shares. You have to agree with them how much they will buy them for. Could be more or less than you paid for them. In some situations, partnerships can be ended and everyone gets money back depending on the percentage of the business they own. So, conclusion. In most situations, a company is the easiest and safest way to go, unless you have a tax situation where a sole trader or a partnership would save you money. And this is the end, my friend. See you next time.